All right, so let's dive into commercial real estate today, trends going into 2025.
Okay.
So you're looking to kind of understand the current state of play and spot potential opportunities, right?
Yeah.
We are going deep on this MoneyWise article.
Okay.
And the title is America's Richest Families Are Feeling Pressure to Sell Their Long-Held Properties as the Office Sector Struggles. Here's what you need to know about commercial real estate going into 2025.
Wow.
And get this, even the wealthiest families, those who typically hold on to properties for generations, are selling.
Right. Yeah. It's not just the office sector struggles either.
Right.
What's intriguing is that these families, who are often incredibly savvy investors, are likely reacting to a confluence of factors. Could they be anticipating a broader economic downturn?
Right.
Or are they shifting their strategies, perhaps eyeing emerging markets or alternative asset classes?
Oh.
This is where it gets interesting.
So we're not just talking about a blip in the office market, but a potential ripple effect across the entire investment landscape. Okay.
Now, the article does highlight the challenges in the office sector. Low occupancy rates, falling property values, all stemming from the rise of remote work.
Right.
But the fact that longtime holders who've weathered previous market cycles are choosing to sell now suggests something bigger might be at play.
The article mentions some pretty stark statistics.
Okay.
New York's office vacancy rate is at 23.6%, and San Francisco's is even higher at 36.8%.
Wow.
I mean, those are huge numbers.
Yeah.
It makes you wonder, has the pandemic permanently changed how we work and view office spaces?
It's a question many are grappling with.
Right.
The shift to remote and hybrid work models has undeniably impacted the demand for traditional office spaces.
Yeah.
But it's crucial to remember that commercial real estate is a diverse market.
Okay.
While offices are struggling, other sectors are actually thriving.
Okay, so it's not all doom and gloom.
Right.
Which sectors are we talking about here?
Well, the retail sector, for example, is experiencing a resurgence. While online shopping has undoubtedly grown, there's a renewed appreciation for the in-person shopping experience.
Okay.
People crave the ability to touch, feel, try things before they buy. And let's not forget the social aspect. Browsing a bookstore, enjoying a meal with friends. These are experiences that can't be replicated online.
That makes sense, but haven't online grocery delivery services like Amazon Fresh and Instacart gained significant traction?
Wow.
How does that factor into the retail landscape?
It's a valid point.
Yeah.
The retail landscape is evolving, and while these services have their place, they haven't replaced the need for physical stores entirely.
Okay.
People still value the immediacy and convenience of grabbing groceries on their way home, or the ability to select fresh produce themselves.
So we're seeing a shift within retail, but not necessarily a decline.
Exactly.
Yeah.
And this high demand for quality retail space, coupled with limited supply in some areas, is actually driving up rents and creating strong potential for investors.
Interesting. It seems like timing and understanding these nuanced trends are key in this market.
For sure.
But what about factors beyond the pandemic and work trends? Are there any other influences at play that might be impacting the commercial real estate landscape?
Absolutely.
Okay.
Interest rates play a huge role in real estate.
Right.
And they've been quite volatile recently.
Yeah.
The article mentions that the U.S. Central Bank has been cutting rates.
Okay.
In September, they cut by 50 basis points, followed by another cut of 0.025% in November. Now, a basis point is simply a unit of measure for interest rates.
Okay.
1 basis point is equal to 0.01%.
Okay, that helps clarify things.
Right.
But for those of us who aren't financial experts,
Right.
what does this actually mean for commercial real estate?
In essence, lower interest rates make it cheaper to borrow money.
Okay.
This applies to individuals taking out mortgages and also to larger investors financing property purchases.
Right.
When borrowing becomes more affordable, buyers can afford to spend more on properties, potentially boosting demand and prices.
So these interest rate cuts, are they generally seen as a positive sign for the commercial real estate market?
It's not that straightforward.
Okay.
While lower rates can stimulate activity, they can also signal concerns about economic growth.
Okay.
The central bank often lowers rates to encourage borrowing and spending when the economy is slowing down.
So it's a bit of a double-edged sword.
Yeah.
Lower rates can boost the market in the short term, but could also point to underlying economic weaknesses.
Precisely. And that's why it's so important to look beyond the headlines
Right.
and analyze the broader economic context when making investment decisions.
So we've got offices facing challenges, retail showing strength in interest rates, creating both opportunities and uncertainties.
Yep.
But what about investors?
Yeah.
Where are they focusing their attention in this complex landscape?
Well, one strategy the article highlights is investing in what they call recession-resistant sectors.
Okay.
These are businesses that tend to perform well even during economic downturns. Think about the things people need regardless of the economic climate, food, healthcare, essential services.
That makes sense. People always need groceries, even during a recession.
Right.
Are there any specific examples of these recession-resistant investments beyond just supermarkets?
Absolutely.
Okay.
Think about healthcare facilities, for example. People will still need medical care regardless of the economy.
Right.
Or self-storage facilities. Demand for storage space often increases during economic downturns as people downsize or relocate. And then there are senior housing communities which cater to an aging population and are less affected by economic cycles.
So it's about identifying those essential needs that remain relatively stable even during times of economic uncertainty.
Exactly.
I like that approach.
It's about understanding the underlying fundamentals and finding those pockets of resilience within a broader market that might be experiencing volatility.
This raises an interesting question, though.
Yeah.
The article focuses on wealthy families selling their properties. But how are everyday investors navigating this market?
Right.
Is commercial real estate even accessible to them?
It's a common misconception that commercial real estate is only for the ultra-wealthy.
Okay.
While some investments do require a certain level of accreditation or net worth, there are actually options available for a wide range of investors.
Okay, let's break that down.
Okay.
What are some of the different ways people can get involved in commercial real estate investing?
Well, for accredited investors, the article mentions a platform called First National Realty Partners, or FNRP.
Okay.
Accredited investors, by the way, are individuals who meet certain income or net worth requirements as defined by the Securities and Exchange Commission.
Okay.
FNRP specializes in retail-anchored properties, which, as we discussed, are performing well currently.
Right.
They handle a lot of the complexities of investing, like finding deals and managing the properties, which can be appealing to busy investors.
So FNRP provides a more hands-off approach for those who meet the accreditation requirement. But what about those with a higher net worth who are looking for more active involvement? Are there specific opportunities tailored to them?
Yes, there are.
Okay.
The article highlights DLP Capital, a firm that focuses on private REITs or real estate investment trusts.
Okay.
Now, a REIT is essentially a company that owns, operates, or finances income-producing real estate. DLP Capital specializes in multifamily residential properties in areas with high growth potential.
So they're essentially providing a way for high net worth individuals to invest in the rental market, banking on the increasing demand for housing in those areas.
Exactly.
But wouldn't investing in the rental market be risky in a potential recession?
Yeah,
People might lose their jobs and be unable to pay rent?
that's a valid concern,
Yep.
and it's why DLP Capital focuses on what they call workforce housing,
Okay.
affordable rental options for working families.
Okay.
This segment of the rental market tends to be more resilient during economic downturns, as the demand for affordable housing remains relatively stable.
Okay, so they're targeting a specific niche within the rental market that's less susceptible to economic fluctuations.
Right.
That's a smart approach. But what about the everyday investor?
Yeah.
Someone like me who's interested in real estate but doesn't have a huge amount of capital or meet those accreditation thresholds. Are there any options for us?
Absolutely.
Okay.
The rise of crowdfunding platforms has opened up real estate investing to a much wider audience.
Right.
These platforms allow you to pool your money with other investors to purchase shares of properties.
Right. I've heard of crowdfunding for creative projects,
Yeah.
but for real estate.
Yeah.
How does that work exactly?
Essentially, these platforms vet properties for their appreciation and income potential.
Okay.
They then divide the property into shares which individual investors can purchase. You essentially become a partial owner of the property, sharing in the rental income or potential appreciation without the responsibilities of being a landlord.
Wow, that's pretty accessible. It breaks down that barrier to entry that a lot of people feel with real estate investing.
Right.
But the article mentions that landlords are spending big bucks on upgrades. How does that factor into the equation for these smaller investors?
That's a great question.
Yeah.
The competitive nature of the rental market, particularly in desirable areas, is pushing landlords to invest in renovations and amenities to attract and retain tenants.
So it's not just about owning a property anymore. It's about creating a desirable and competitive living experience.
Exactly.
But how do these smaller investors who only own a fraction of the property benefit from these upgrades?
Well, that's where these crowdfunding platforms come in.
Okay.
They often handle the property management, including overseeing any upgrades or renovations.
Okay.
The costs are typically factored into the overall operating expenses of the property, which are shared among the investors.
So even with a smaller investment, you can potentially tap into the growth of these properties without the headaches of being a landlord. Are there any specific crowdfunding platforms that stand out in this space?
The article specifically mentions Arrived, which focuses on rental homes and vacation properties.
Okay.
They've gained quite a bit of traction in recent years, offering investors access to a diversified portfolio of properties across different markets.
It sounds like there are more ways than ever to get involved in commercial real estate, regardless of your income level or experience.
Exactly. And that's one of the most exciting developments in this market.
Yeah.
It's becoming more inclusive and accessible, opening up opportunities for a wider range of investors.
Yeah, I think that's fantastic.
Yeah. It's really democratizing the real estate investment landscape.
So we've got a lot more to dig into in this MoneyWise article.
Okay.
So let's take a quick break and we'll be right back. It's fascinating how these trends are playing out in different parts of the country.
Yeah.
The article specifically mentions New York City,
Right.
where they're doing something quite interesting with all that underutilized office space.
Yes. New York City is a prime example of how the market is adapting.
Okay.
They're converting those empty office spaces into rental apartments.
Ooh, conversions are always intriguing.
Yeah.
But does that really make sense? I mean, aren't people moving away from cities, especially with the rise of remote work?
While some people have chosen to relocate, the demand for housing in major metropolitan areas like New York City remains incredibly strong.
Okay.
The article highlights that New York City's rental vacancy rate is at a 50-year low, sitting at just 1.4%.
Wow, that's incredibly low. So it seems like the allure of city life hasn't faded entirely.
Not at all. Cities continue to offer a unique blend of cultural attractions, job opportunities, and social experiences that attract people from all walks of life. And with limited space for new construction, converting existing structures is a practical solution to address the housing shortage.
So they're essentially taking advantage of a situation where they have an oversupply of one type of real estate offices and converting it to meet the demand for another residential.
Exactly.
That's pretty clever.
And this trend isn't limited to New York City.
Right.
We're seeing similar conversions in other major metropolitan areas across the country as developers and investors seek to capitalize on the high demand for rental units.
This is all very interesting from an investment perspective.
Yeah.
But for those of us who might be considering real estate investments, how do these trends affect our decision-making? Is it smarter to invest in residential properties in these high-demand areas, or are there other factors we should be considering?
That's a great question, and there's no one-size-fits-all answer.
Right.
Real estate investment decisions should always be made on a case-by-case basis, taking into account your individual investment goals, risk tolerance, and market knowledge.
So due diligence is paramount.
Exactly.
We need to look beyond the hype and really understand the underlying fundamentals of any potential investment.
Absolutely. Don't just jump on the bandwagon because something sounds trendy.
Right.
Take the time to understand the market, the specific property, and the potential for growth and income generation. Factors like location, property condition, rental rates, and local economic conditions all play a crucial role.
It's like anything else in investing, right?
Yeah.
Informed decisions are the best decisions.
Precisely. And remember, real estate is a long-term game.
Okay.
It's about understanding the market dynamics, conducting thorough research, and carefully evaluating the potential risks and rewards.
Speaking of risks and rewards, the article mentions that landlords are spending significant amounts of money on upgrades. Why is that?
Yeah.
And how does it impact the potential return on investment for those looking to invest in rental properties?
The rental market has become incredibly competitive, particularly in desirable areas.
Okay.
Tenants have more options than ever before, especially with the rise of platforms like Airbnb, which offer short-term rental alternatives.
Right.
Landlords are investing in renovations and amenities to attract and retain tenants, differentiate their properties, and justify higher rental rates.
So it's not just about owning a property anymore. It's about creating a desirable and competitive living experience.
Exactly. Tenants are looking for more than just four walls and a roof.
Okay.
They're seeking modern kitchens, updated bathrooms, in-unit laundry facilities, fitness centers, communal spaces, and high-speed internet access.
It sounds like landlords need to provide a more comprehensive lifestyle package to stand out in today's market.
Precisely. And this trend is something investors need to be aware of. Upgrading a property to meet these higher expectations can require significant capital investment,
Right.
which needs to be factored into the overall investment analysis.
So when evaluating a potential rental property investment,
Right.
it's crucial to consider not just the purchase price, but also the potential costs associated with upgrades and renovations.
Absolutely.
Are there any strategies investors can employ to mitigate these costs or maximize their return on investment?
One strategy is to focus on properties that are already well-maintained and updated.
Okay.
This can minimize the need for immediate renovations and allow you to start generating rental income sooner.
That makes sense.
Another approach is to target properties in up-and-coming neighborhoods where property values are still appreciating.
Okay.
By getting in early, you can potentially benefit from both rental income and property appreciation over time.
That makes sense. But those strategies might require more research and a keen eye for identifying undervalued properties or emerging market trends.
Exactly. And that's where working with experienced real estate professionals can be invaluable.
Okay.
They can provide insights into local market conditions, identify potential investment opportunities, and help you navigate the complexities of property acquisition and management.
So having a good team in place can make all the difference.
Absolutely. Now, the article also mentions another interesting region for potential growth,
Okay.
the Sun Belt.
Okay.
This region, encompassing states across the southern U.S., has experienced significant population growth over the past decade.
I've heard about the Sun Belt's rise,
Yeah.
but I've also heard arguments that its growth is unsustainable.
Right.
How do you address that?
It's true that some experts have expressed concerns about the long-term sustainability of the Sun Belt's growth, citing factors like water scarcity, climate change, and potential infrastructure limitations.
Okay.
However, others argue that the region's affordability, job opportunities, and favorable climate will continue to attract new residents and businesses,
Right.
driving further growth.
So there are differing opinions on the Sun Belt's future.
Yeah.
It sounds like investors need to carefully weigh the potential risks and rewards before jumping into that market.
Absolutely.
What specific factors should they be considering?
It's crucial to look beyond the overall population growth and analyze the specific demographics, economic indicators, and job markets of individual cities and regions within the Sun Belt.
Okay.
Some areas might be experiencing rapid growth and offer attractive investment opportunities, while others might be facing challenges.
It's about understanding the nuances within the region, not just viewing it as a monolithic entity.
Precisely. And that requires thorough research and analysis.
So we've talked about conversions in major cities, the competitive rental market, and the potential of the Sun Belt. But let's circle back to investment options.
Okay.
We've covered accredited investors and high net worth individuals.
Right.
But what about everyday investors who might not meet those thresholds?
Yeah.
Are there still ways for them to get involved in the potentially lucrative world of commercial real estate?
Absolutely. As we touched upon earlier, crowdfunding platforms have made it possible for anyone to invest in real estate regardless of their income or net worth.
Okay.
These platforms allow you to pool your money with others, to buy shares of properties, lowering the barrier to entry, and opening up access to a wider range of investment opportunities.
Right, those platforms where you can essentially become a fractional owner of a property.
Exactly.
But how do these platforms ensure that these smaller investors are protected and their investments are managed responsibly?
Reputable crowdfunding platforms have stringent vetting processes for both the properties they list and the sponsors who manage those properties.
Okay.
They conduct thorough due diligence, assess the financial viability of the projects, and ensure that the sponsors have a proven track record of success.
So there are safeguards in place to protect investors and minimize risks.
Exactly. And these platforms typically provide investors with detailed information about each property, including financial projections, market analysis, and sponsor background checks.
That's reassuring. It sounds like crowdfunding platforms offer a more accessible and potentially less intimidating way for everyday investors to participate in the commercial real estate market.
They do, and they provide an opportunity to diversify your portfolio, potentially earning passive income and benefiting from property appreciation without the responsibilities of being a landlord.
But don't these platforms typically charge fees for their services?
Right.
How does that impact the potential return on investment for these smaller investors?
Yes, crowdfunding platforms typically charge fees, which can vary depending on the platform and the specific investment.
Okay.
These fees are usually transparently disclosed and are factored into the overall investment costs.
Okay.
Investors should carefully consider these fees when evaluating the potential return on investment.
So it's important to weigh the fees against the potential benefits and compare different platforms to find the best fit for your investment goals.
Precisely. And always remember, no investment is without risk.
Right.
It's crucial to conduct thorough research, understand the fees involved, and carefully assess the potential risks and rewards before making any investment decisions.
Okay, so we've covered a lot of ground in this deep dive into commercial real estate.
Yeah, we have.
From struggling office spaces to thriving retail centers,
Right.
from conversions in bustling cities to the potential of the Sun Belt, and from opportunities for accredited investors to crowdfunding platforms for everyday investors. It's been quite a journey.
It really highlights the dynamic and ever-evolving nature of this market.
Right.
There are challenges and opportunities, trends and counter-trends, and a constant need to adapt and stay informed.
Exactly. So as we wrap up this deep dive, what are some of the key takeaways you want our listeners to walk away with today?
The first takeaway is that knowledge is power in commercial real estate.
Okay.
This isn't a market where you can just jump in blindly and expect to succeed. Understanding the nuances of different sectors, the impact of economic trends, and the intricacies of financing and regulations is crucial.
It's about doing your homework and not being afraid to ask questions.
Precisely. The second takeaway is that diversification is key.
Okay.
Don't put all your eggs in one basket. Explore different sectors, regions, and even investment strategies to spread your risk and potentially maximize your returns.
So a balanced portfolio that includes a mix of retail, residential, industrial, and maybe even some alternative assets like self-storage or healthcare facilities could be a smart approach?
It depends on your individual investment
Good.
goals and
Right.
risk tolerance, of course.
Right.
But the principle of diversification holds true across the board. And the third takeaway, and perhaps the most important, is to remember that commercial real estate is a long-term game.
Okay.
It's not about getting rich quick. It's about making strategic investments, understanding market cycles, and being patient.
It's about building wealth steadily over time, weathering the inevitable ups and downs of the market.
Exactly. And that requires a combination of careful planning, thorough research, and a willingness to adapt to changing conditions.
And of course, having a good team of advisors and professionals in your corner can make all the difference.
Absolutely. Surround yourself with experts who can provide guidance, insights, and support throughout your investment journey.
Well said. And now for a final thought to ponder as we conclude this deep dive.
Okay.
Given everything we've discussed, what type of commercial real estate investment, if any, seems most appealing to you right now? What are your goals?
Right.
What are your concerns?
Yep.
And what steps can you take to make informed decisions that align with your individual circumstances?
It's a question worth reflecting on. The answers will vary from person to person, but the process of asking these questions and seeking out the knowledge and resources to answer them is what will ultimately lead to success in this exciting and ever-evolving market.
So to our listeners, as you continue to explore the world of commercial real estate, keep those key takeaways in mind, stay informed, diversify, and think long-term.
And most importantly, never stop learning and never be afraid to ask questions.
Fantastic advice. Thank you so much for joining us on this deep dive into commercial real estate.
It was my pleasure.
It's been a pleasure exploring this fascinating market with you. And to our listeners, thank you for tuning in. We hope you found this deep dive informative and insightful. Keep exploring, keep learning, and until next time, happy investing.